A recession is coming and it's unavoidable, but the real question is why is it on the horizon and where should we invest, not just survive but thrive in these challenging times. Stay tuned, because by the end of this video I'll unveil all the critical details that prove a recession is knocking at our door, and more importantly, how you can turn this impending storm into a golden opportunity. I will present in this video 4 key factors and why they have a big impact on the greater economy. First is the global geopolitical conflict. Now, let's talk about why the Israel-Gaza conflict could lead to a recession in 2024, and I'll explain why in simple terms so anyone can understand. Think of Middle East as a crucial hub for shipping routes. It's like the highways for global trade, helping stuff like gadgets, clothes, and energy move around the world. If the Israel-Gaza conflict gets worse and spreads to nearby areas, these important trade routes might get messed up. Picture this: deliveries getting delayed, stuff getting more expensive, maybe even shortages of things we really need. And guess what? This isn't just a problem for the Middle East, it's a domino effect that ripples around the world. One big worry is how it could mess with oil prices. If the conflict goes big, the price of oil could shoot up. And when oil prices go up, it's like a chain reaction. See, the oil market is already a bit tight because there's not as much oil being made. So if this conflict adds more pressure, it's like pouring fuel on the fire. And there is more to the story. We are already in uncertain times with the ongoing war in Ukraine and banks making money rules tighter, higher energy costs, plus rising prices and interest rates can be a recipe for a recession. That's when the economy takes a nosedive. Experts say oil prices could hit over $100 for quite a while. That means prices for things we buy every day might jump, the economy could slow down, and we might even be looking at a full-blown recession. So, when we are watching the Israel-Gaza conflict, it's not just about that part of the world. It's a big hint about what's coming for the world's economy. So what goes down in one place can mess things up everywhere. The second word I have for you today is China's real estate sector crisis. It's all about 2 big real estate companies, Evergrande and Country Garden, and an astonishing number of empty homes in China. And that's a big problem. They've built up an enormous $500 billion in debt. To help you visualize, having a stack of $1 bills would be enough to reach approximately 55,000 kilometers. Here is the deal. People are hesitant to buy houses right now. They are waiting for discounts because they think a recession might be on the horizon. This means these companies can't pay their debt anytime soon because they are not capable of making sales right now. Think of it this way. Imagine you have a credit card bill, but you are waiting for a big sales to pay off. That's what's happening here. People are waiting for a sale on houses, and these companies can pay their bills. But it doesn't stop here. China has an astonishing number of empty homes. There are enough empty homes to house 3 billion people. Experts calculate this based on the average size of homes and the number of people in each household. But remember, the exact numbers can vary. So while Evergrande and Country Garden are dealing with a mountain of debt, the massive number of empty homes in China also raises concerns on a global scale. Let's talk about something that might sound a bit fancy, but it's super important. That brings us to the third point: bankruptcies in Europe. These are like red warning signs that can tell us if a recession is on the way. I'll break it down for you in simple words. So, recently, the number of businesses in the European Union that couldn't pay their bills hit a record high. It's like when someone's money troubles get so bad that they have to say, we can't do this anymore. In the second quarter of 2023, 8.4 more businesses went down this road compared to the fourth quarter. This isn't good news and has been happening for 6 straight times. That's the longest it's been this way since they started keeping track back in 2015. Now, here's the backstory. During the COVID pandemic, the EU chipped in over $8 billion to help small and medium businesses. It was like giving them a financial safety net, but now, after the pandemic rules eased up, these businesses aren't bouncing back like they should. In fact, more businesses are going broke, and countries are also ending up with more debts. One area that's having a really tough time is the food and accommodation sector. In fact, the number of companies in this sector going bankrupt jumped by a massive 23.9%. It's like they are struggling to keep their heads above water. The transportation and storage sector is also feeling the hit because energy prices are skyrocketing. So why does this matter? Well, when lots of businesses can't pay their bills, it can lead to people losing their jobs, and that can put a dent in the economy. Think of it like a puzzle where every piece connects. If more businesses are going under, it can make the whole picture look gloomy, and that's when a recession might start knocking on the door. So remember, When you hear about more and more businesses going bankrupt in Europe, it's like a signal telling us to keep an eye on the economy. It's all interconnected, and these bankruptcies are like pieces of a bigger puzzle that can show us what's coming next. Last point I'm making is that Europe is facing a major energy crisis. Here is why this energy situation matters in simple terms. Imagine you need energy to power your home, just like you need fuel to run your car. Europe relies on a lot of this energy from Russia, especially natural gas, which is used for heating, electricity, and industry. Now, think of this energy supply like a lifeline. It keeps homes warm, factories running, and lights on. But this lifeline has been squeezed tight because Russia has cut off a big part of the energy it used to send to Europe. As a result, the price of electricity and gas has skyrocketed, making life more expensive for regular people and businesses. This problem could get worse. Europe might have to go through a winter without as much Russian gas, which could mean even higher prices and shortages, which can hit your pocket hard. So, why does this matter for the economy? It's like a ripple effect. When prices rise too fast, it can slow down the economy and even push it into a recession. People and businesses may struggle to afford what they need, and that's not good for anyone. So it's a global challenge that needs a group of effort to solve. It's undeniable that the issues are putting immense pressure on the worldwide economy. As we have witnessed in recent times, traditional safe havens like S&P and major stocks are taking a beating, leaving investors in a state of uncertainty. In recent days, while major stock markets like the S&P have plummeted, Bitcoin has soared to new heights, reaching a remarkable 35k. What's even more compelling is that Bitcoin behaves like gold, but with a greater potential for profit. Look, I get it. 2023 feels like one of those years where you are holding your breath. Stock markets are roller coasting, economies are playing Jenga with your savings, and geopolitical events are like curveballs in a baseball game. But in the middle of the wild ride, there is Bitcoin. And it's not just surviving, it's thriving. You might be thinking, why is Bitcoin going against the flow? Well, that's the billion-dollar question we're diving into right now. It's like watching the underdog winning the championship, and we're about to find out how. This isn't your usual financial story. While the traditional markets are feeling the heat, Bitcoin's out there making its own rules. It's like the cool kid in the class who's not following the herd. And that's what we are here to understand. Investors are on the hunt for safety. They want something that won't drown when the financial ship starts sinking. And Bitcoin, well, is showing that it's got what it takes. In a way, Bitcoin, the digital newcomer, is stepping up and playing the safe haven game just like gold. It's a phenomenon that's got the financial world buzzing. But there is more to this story than meets the eye. We've got something called the Bitcoin ETF. You might be wondering, what in the world is a Bitcoin ETF and why should I care? Let me break it down for you. ETF stands for Exchange Traded Fund. Think of it as a bridge that connects the traditional financial world to the world of cryptocurrencies, with Bitcoin leading the charge. See, the Bitcoin ETF also brings something else to the table: legitimacy. It's like Bitcoin just got the stamp of approval from the big guy. It's like the Wild West going upscale, and this legitimacy could open the door to even more investors getting on board. So, it's not just about more money, it's about a shift in perception. Bitcoin is not just a digital oddity, it's becoming a legitimate asset class. I'm gonna say it again, a legitimate asset class. Now, why should you care about all this? Well, if you're thinking about investing in Bitcoin, this ETF is like your golden ticket. It's like having a backstage pass to the biggest show in town. Currently, Bitcoin ranks as the 12th largest market in the world and is fiercely competing with giants like Tesla for the 11th spot, with only a 5 billion difference in market cap. If Bitcoin were to achieve just half of the market cap of gold, its price could reach a staggering $350,000. This presents a remarkable opportunity for investors looking to not only safeguard their wealth, but also potentially capitalize on the impending recession. Now, it's essential to remember that Bitcoin isn't a guarantee of instant riches. Like any investment, it comes with risk. Prices can be volatile, and it's essential to do your research and invest only what you can afford to lose. Alright, we've navigated some pretty exciting waters today. The financial world is like a maze, and we are here to be your guide. So stay tuned for the next episode. It's just around the corner and you won't want to miss it. And if you haven't already, don't forget to hit that subscribe button and ring that notification bell. We are here to help you every step of the way. Stay curious, stay engaged, and stay tuned. Don't forget to hit that subscribe button to keep you informed. We'll catch you in the next one.